Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Here's a question. Is your IRA an IOU to the IRS? So if you're somebody listening and you have income of $50,000 to $150,000, the Brookings Tax Policy Center just ran a report that 3 out of 10 families, middle income families defined as $50,000 to $150,000, will actually experience a tax increase under the Trump tax reform plan, not a decrease. But if you fall before or after those numbers, if you've saved $200,000 or more in IRAs or former 401ks, 403bs, any type of tax deferred account, the government's gunning for your back pocket, your hard-earned savings to make up for the projected deficit that would take place by lowering our corporate tax rate from 35 to 20 under the Trump tax reform proposal. So where's the government going to find the tax increases to offset the corporate tax rate decrease? Your IRA and your 401k. And it will become, and it already is, sadly, with required minimum distributions, an IOU to the IRS in what you own in your IRA. Folks, they're gunning for 2 particular tax-focused increases. One is a growth tax on your 401k. A 15% growth tax to make up for this projected deficit shortfall by dropping the corporate tax rate. They're going to collect money from those that have worked hard to save money towards their retirement. Secondly, they're going to gun for the beneficiaries of your hard-earned life's work called a 401k or IRA. After the second spouse passes, the children will have a significant inheritance tax. They'll no longer be able to stretch that IRA over their lifetime. They'll have to liquidate it in 5 years. And this isn't a matter of if, it's a matter of when. The Senate has already passed and 100% in favor of this vote to pass already last fall. So the chips are coming, and the chips, unfortunately, are going to be pulled off our table if you don't act now. In fact, we had a client this week that said, Chuck, I had no idea until you were able to teach me how our own tax code allows you to grow your money in these retirement accounts without tax, but also distribute that money without tax, and have that money avoid even taxing your Social Security or raising your Medicare Part B and D premiums. Or as one client said this week, I love it because now the government's out of my retirement. I don't have to worry about required minimum distributions. Folks, let me teach you how you can be a tax-free retiree, how you can get the government out of your retirement or the IRS out of your IRAs, because the time to act is now. Go to retirementprotected.com. That's retirementprotected.com and register. Spouses are strongly encouraged to attend together. Block out about an hour of your time to learn the IRS strategy that has proved itself with a measurable track record of results to avoid taxes while your money grows, to avoid taxes while you distribute your money, and avoids taxes of any monies being passed on to your children, church, or charity. That's retirementprotected.com. retirementprotected.com, and stop worrying about your IRA being an IOU to the IRS.